welcome to the Deep Dive. Today, we're zeroing in on Manappuram Finance.
That's right. We're looking at their latest investor presentation, Q4 and the full fiscal year 2025.
Exactly. And our mission, really, is just to pull out the key financial bits, the strategic insights, so you get a clear picture of where they are and, well, where they're heading.
Yeah, think of it as us doing the homework on this pretty dense document for you, getting straight to the point.
Okay, so let's start with the big picture. Their vision, their strategy.
Right. First off, Manappuram sees itself as the financial partner for underbanked customers. That's their core idea.
And they're big in gold loans, right? Number 2 in India.
Huge. Number 2, nationally, they really push that trusted brand image, nationwide reach.
And it's not just about being big. They mention innovation. Things like OGL.
Yeah, their online gold loan product. And they've got the cellular vaulting thing, too. They're definitely trying to modernize.
Which is interesting in what feels like a very traditional market.
Exactly. They see those as differentiators. And beyond gold, they are carefully expanding.
Into what specifically?
Well, things that fit their current customers. So small home loans, financing used vehicles, especially for self-employed people, and MSME loans, small business stuff.
So it's a calibrated growth, not just chasing everything.
Seems that way. Sticking close to home, customer-wise.
And they have the infrastructure. You mentioned the branches earlier.
Whoa, yeah. Over 5,000 branches. And what was it, 50,000 employees? It's a massive operation.
That's quite the footprint. They also talk about managing risk, which must be critical with gold.
Absolutely vital. Appraisal, keeping the gold safe, custodial risk and valuation. They stress they're rigorous about that.
I mean, they're holding on to a lot of gold, right?
Around 56 metric tons, they say, for about 2.6 million active customers. That requires a lot of trust.
No kidding. And technology plays a role here, too.
Increasingly so, yes. For sourcing clients, underwriting the loans, managing risk, it seems to be a growing focus.
They also sound quite conservative, emphasizing process adherence, timely auctions if needed.
Definitely. They mention a conservative credit culture. Plus, they highlight their strong financial base. That Tier 1 ratio is high, 30.91%.
Which is a key buffer, basically.
Right. And they have different ways to get funding. Good asset liability management, or ALM, and board-driven governance is mentioned, too.
So summing up the strategy.
It's about making gold loans mainstream. Convenient, affordable, becoming that one-stop shop for borrowing and maybe even protection needs for their target customers.
Okay, let's pivot to performance then. Q4 and the full year FY2025, what were the highlights?
Well, the main number, consolidated gold loan AUM assets under management that grew nicely, up 18.7% year on year, reached INR 25,586 crore.
Solid growth in the core business.
Yes. The standalone gold loan book grew similarly too. And the yield, what they earn on those loans, was stable, around 22.35% for the year.
What about the LTV? The loan-to-value on gold.
That was at 57% as of March, and actually down a bit from 60% the previous quarter.
Interesting. Maybe a touch more cautious lending.
Could be. But on the flip side, their microfinance book, MFI, under Asirvad, that shrank quite a bit, down 34.1% year on year.
Wow, that's a significant drop. Any other key numbers? Cost of funds, cash.
Their borrowing cost, consolidated, was 9.45% in Q4. They seem well matched on assets and liabilities, not relying much on short-term commercial paper.
Which is generally seen as less risky.
Right. And they had a good chunk of cash on hand, over INR 3,800 crore. Plus, that capital adequacy ratio, CRAR, is strong at 30.91%. Oh, and they declared a dividend, 50 pays per share.
Okay, let's zoom out again. The consolidated financials for the full year FY25, what's the overall picture?
It's a bit mixed, actually. Total AUM was up slightly, just 2.3% year on year, reaching INR 43,034 crore. But operating expenses relative to their net interest margin went up.
And that usually hits the bottom line.
It did here. Profit before tax and profit after tax both down significantly, like over 40% year on year.
Ouch. So returns suffered.
Yeah. Return on assets and return on equity were lower. And Q4 itself, the last quarter, actually showed a consolidated net loss and a dip in AUM compared to the prior quarter.
Okay, so strong gold loan growth we talked about earlier.
Yeah.
But the overall group picture is less rosy because of other factors.
Seems like it. The operational numbers kind of back that up too.
How so?
Gold AUM grew well in Q4, quarter on quarter and year on year. Gold tonnage held steady, branch numbers stable. But gold customers dipped slightly. And importantly, the non-gold AUM dropped quite a bit in Q4, down 11.5% versus the previous quarter.
So that non-gold part is where the drag seems to be coming from.
Right.
What's the AUM mix look like now?
Gold is definitely more dominant now. It's up to 59% of the total AUM in Q4 FY2025 compared to 51% a year ago.
And microfinance, given the drop you mentioned.
Yeah, MFI is down to 17%, vehicle finance is around 11%, housing finance 4%, and the rest is smaller.
So heavily reliant on gold, which is doing well, but the diversification isn't quite firing on all cylinders currently.
That seems a fair summary based on these numbers.
And how are they funding this? You mentioned diverse sources.
Yes, they list various types. Bank loans, bonds, commercial paper, though that's low, it looks pretty diversified. And they point out their borrowing cost has been trending down, plus they got some rating upgrades.
From S&P and Crystal, that's always positive.
Definitely helps confidence.
Okay, let's isolate Manappuram Finance itself now, the standalone entity, without the subsidiaries like Esservad. How did it perform?
Now that picture looks quite a bit better. Standalone AUM grew strongly, up 15.1% year on year.
And profitability?
Profits, both before and after tax, were up healthily for the full year, around 7-8%. Their operating cost efficiency actually improved slightly. Returns on assets and equity were decent too. ROA at 4.8%, ROA at 16.1% for the year.
So the core engine is running well. The issues seem concentrated elsewhere.
That's what the standalone numbers suggest, although even standalone, Q4 saw a slight dip in profit compared to Q3, but the full-year trend is positive.
And the presentation breaks down the standalone results further, trends in bad loans, etc.
Yeah, it shows net worth growing steadily, capital adequacy strong, NPAs, non-performing assets are there, both gross and net, but seem manageable. Net yield looks fairly stable, too, over recent periods.
And the driver remains gold within standalone.
Absolutely. Average ticket size for gold loans generally trending up. Customer base dipped slightly in Q4, but tonnage is high. LTV managed conservatively, and AUM per branch keeps rising.
How are they planning to keep growing that core gold business?
They list a few levers. Celebrity endorsements, using agents, branch improvements, really pushing that online gold loan OGL and digital marketing.
Makes sense. And geographically, still south-heavy.
Yeah, South India is 63% of the gold AUM, but they have presence everywhere. North is 17%, west and east 10% each, and a good mix of rural, semi-urban, and urban metro business.
That online gold loan OGL seems important strategically.
Definitely. They highlight its growth. Average ticket size is up, and it's becoming a bigger slice of the overall gold AUM pie. They tout the convenience, 24/7 access, instant funds, paperless.
Okay, let's tackle Asservad Microfinance directly then. You mentioned the portfolio shrinking and profitability issues.
Right. The results for Asservad show losses for Q4 and the full FY25. The main culprit seems to be a big jump in impairment provisions, money set aside for potential bad loans.
So, credit quality issues biting there.
It appears so. While their operating income was up slightly for the year, these higher provisions wiped out profits and led to losses. AUM is down, as we noted.
What are they saying about managing that asset quality?
They show more loans moving into higher risk stages, but they also say they have strict checks, like looking at borrowers' over-indebtedness. They mention being more cautious in sourcing loans now, focusing on portfolio quality, collections, using biometrics, things like that.
So, trying to tighten the ship there. What about the other subsidiaries? Housing finance.
Manappuram Home Finance AUM has grown steadily. Focus is on affordable housing, mainly self-employed customers in the South and West. GNPA, the bad loan ratio, looks relatively low. Strategy leans on the parent brand and a low-cost model.
And vehicle finance.
That's also grown its AUM. Focuses on used commercial vehicles, often in rural or semi-urban areas. GNPA is a bit higher here than in housing. They're pushing into rural markets using digital tools. It operates as a division within the main Manappuram Finance.
Okay, and lastly, the standalone MSME business.
Right, this operates out of existing gold loan branches. It's also seen AUM growth, and they say asset quality is stable. Strategy involves leveraging the branch network, digital collections, cross-selling to existing customers.
Got it. The presentation also touches on CSR, right? Corporate social responsibility.
Yeah, they list several initiatives building houses, supporting disabled individuals, healthcare donations, environmental support, showing they're involved in the community.
And quickly, management and board.
Experienced leadership team listed, covering the main company and subsidiaries. Also highlights the independent directors on the board, standard stuff for investor presentations.
And the stock info. Shareholding.
Provides market cap data as of early May 2025, over 19,000 crore rupees. Shows the shareholding mix. Promoters, foreign investors, FPIs, mutual funds, individuals. Mentions stock performance over the last year, too. And lays out the group structure, clearly the subsidiaries, and what the standalone entity offers.
Okay, so let's wrap up this deep dive. Key takeaways from Manappuram's latest presentation.
Well, first, their core gold loan business remains strong. Good growth, stable yields, it's clearly the engine. But their diversification efforts, especially in microfinance via Asirvad, have hit some serious bumps. Increased provisions there led to overall consolidated losses recently.
So the overall group profitability took a hit, even though the standalone Manappuram finance entity performed much better.
Exactly. It highlights the challenge of managing different types of lending businesses under one umbrella. The housing and vehicle finance segments seem to be doing okay, growing steadily, though maybe with slightly different risk profiles.
So for you, the listener, it's really about weighing that core strength in gold against the challenges and, I guess, opportunities in these other segments. Plus, considering how broader economic factors might play into all this going forward.
A diversified model, but with gold still very much the main story and some clear pressure points in the other parts of the portfolio right now.
A concise picture from a complex set of results. Thanks for diving deep with us today.